we also saw quick news grabs on a bunch of smaller acquisitions this quarter. Of late, I think some of them are as recent as 30 to 45 days. M2P Fintech bought Mad Street Den in Chennai, both Chennai companies. Krafton bought Nautilus Mobile, classic strategic acquisition of a gaming company trying to spread its wings in India. Perfios bought Credit Nirvana, and they've been on a spree. So look at the strategic motivations, right? M2P Fintech, we'll go one by one very quickly. I'll just summarize what I think I know of the company. M2P Fintech APIs are being enhanced with AI. Mad Street Den had AI capabilities. It was not a great acquisition from what we hear because probably Mad Street Den was reaching its own challenge in scaling or beating venture expectations. It's venture funded as well. So from what we understand, it's probably a $10 to $15 million asset purchase. Relatively speaking, not a super interesting sized acquisition for anybody. Mix of cash and stock is what we hear. So probably the cash to the investors, getting back a fraction of their capital back, and the stock is to motivate Ashwini and team to come into the M2P Fintech acquisition and then build out the company. We have seen many like this at Blume, right? If you look at Runner getting acquired into Zomato, if you talk about Nutanix acquisition of Minjar, which Vijay, who now runs Atomic, worked with. So this is consolidation in SaaS. You're seeing a vertical SaaS play, AI-led fintech infra, buying some piece that they can integrate through AI. Helps that culturally they were aligned in Chennai, right? And so the team will get absorbed and become like the AI division of M2P. So this is very similar to what we saw in our $30 to $50 million acquisitions, ZipDial, Minjar. It's just that ours was sizable. It actually returned because they had not raised too much capital. They happened pre-Series A in some sense in both cases. They had a small Series A at best. The returns were actually good. We made like 3x, 4x in those outcomes. I don't think that happened here. The other one is like classic, cross-border strategic. So Krafton is a giant gaming company, Asian global interests. So I think they're Korean. They come back, they want to be in India. They want to expand their presence. They know cricket is big. Nautilus has a cricket game, and they realize that buying that game signals their interest into going deeper in the game, deeper into the market, expanding using the cricket game. And what they've done is they're clever. In gaming, we've typically seen like the ad agency business. They don't buy and try to integrate. They keep these as separate studios. And they give them their power of distribution. They give learnings from their other portfolio, but they don't actually try to force fit it. So we've seen who's the biggest daddy in these. Nazara has been buying a boatload of companies. So for the first time, we're seeing that the Indian market is maturing, that even the foreign buyers want to come in and buy these assets in India. So it looks like it was a majority ownership, like 75% for about a 13.5 million, which means it valued at about 18 million. It's supposedly an all-cash deal, which means everybody has made some money for having built this out and probably kept some headroom for the growth that comes. The Krafton will support, take this format to esports, put in new games under the studio. It's classic studio-based sort of acquisition, which happens a lot in gaming. The last is Perfios buying Credit Nirvana. So Perfios has been trying to become like a full stack, financial services sort of SaaS player, basically allowing for collections, full stack lending solutions, credit, KYC, everything, right? So they compete with IDFI in our portfolio, by the way, right? And so they're thinking they want to do global expansion. They're very ambitious. I mean, close to a unicorn or beyond that, $100+ million of revenue. They've had an acquisition history now for 4 years. Bought one of our closest competitors to IDFI. Think about it, all of that, but still the Credit Nirvana is still a small business. It's only $1.5 million of revenue. So we're expecting this to be a less than $10 million acquisition. And it'll become a subsidiary of Perfios, and it'll cross-sell to Perfios clients and the AI integration into the Perfios suite. So this is classic domestic consolidation. The first one, M2P, was buying tech capability, right? And Nautilus was like game expansion, portfolio expansion, cross-border expansion. So you can see that unless these are minting money, nobody wants to pay top dollar for them, because they have to assume that none of these will grow with their own distribution as significant. And even if they do, it'll entirely be dependent on the distribution. So if they have no natural growth, like, in the case like a minimalist, where it was growing very fast, the premiums will not get paid. So these tend to be, if you think about it, all of them are between $5 and $20 million. So this summarizes these two big themes we had brought up in our NDA analysis of the exit market.